for Bitcoin because, it was a $1.3 trillion asset. Now it's now it's 2.0 something trillion dollars, right? So it's getting more and more valuable. I think we need to become more and more conservative. Like, do we even want multiple releases of Bitcoin Core a year, or do we want one a year or one every 2 years? I don't know, but I'm okay with like a 1 to 2 year release cycle cadence, barring any urgent bug fixes for critical vulnerabilities, because there don't need to be that many features added to Bitcoin at this time. I don't know. There's a time warp attack that's being worked on, right? But I mean, there's a problem here too, which is the current state of things is making it very difficult for getting consensus to upgrade the network, especially with Core the way it is now. Like, as you said, trust in Bitcoin Core is at an all-time low. Will they be able to push a soft fork through to fix something? I'm open to it, but not right now. I mean, there's no need for it. Like, people pushing for covenants, you can do that on Liquid right now. Yes, you don't like Liquid, probably you want it on the main chain, but prove out the use case and get some adoption. Like, have people using it for some wallet somewhere for some reason. But you can't just say we need this. And I don't think we're at a stage in Bitcoin's life cycle where that should be the case, where someone comes to the table and says, I need something and let's change something. Like, that's just completely unreasonable for an asset that is the size of Bitcoin. And, I agree that we do need bug fixes. Like, there are things that we can fix, but like, that bug is in 2038. We have time, right? Where there's no urgency. We can spend more time analyzing the current state of Bitcoin, looking for more bugs, fixing issues, and fixing these longer term bugs that, can wait for a decade.
Is it fair to use Liquid as a comparison there? Like, I like Liquid. I think it's going to be useful. I think there's obviously very real use cases for it, but it is a custodial model. It's not the same as these things coming to Bitcoin.
Well, I don't like the word custodian for anything like eCash, because custodian is a legal term. It's like you have a legal responsibility to someone because you're taking care of something for them. It is a definition. I would call things like Liquid, eCash, Fediments, and the like, cypherpunk asset pools or caps. And, you're just pooling and unpooling together. And there are different security models around these things, but it's not a custodian. So you want Liquid because you want the benefits of the Liquid chain. You can't expect to have your Bitcoin and have the Liquid BTC at the same time, right? It doesn't work that way. So you have to make a trade-off and take one over the other. But you can always swap back, and there's utility there. But my point is, if you wanted to build something with covenants, there's simplicity now activated on Liquid. Go and build a commercial project on Liquid that is in demand and people want it, right? Like, Aqua is a good use case. We're seeing a massive amount of Aqua usage, transaction volumes, because people want to use Liquid, and being able to use Liquid as a base for Lightning payments or aggregating smaller Lightning payments to swap to Bitcoin main chain and consolidate their UTXO. So the onus is on the people asking for the thing to prove that there is a real use case for it, and it's not just theoretical that they themselves want. Because if you look at Taproot, like, we rushed to activate Taproot. It was a major emergency because we want to have signature aggregation. Where's the signature aggregation? I don't know. I don't see it. Do you? Every day you see an announcement that Strategy bought this many coins, Metaplanet bought this many coins, this new company is buying, and the price is going sideways and down. So it makes zero sense, and I don't really have an answer about why. I think it's probably a number of things. It could be paper Bitcoin. It could be ETFs. It could just be outright fraud like FTX. Some exchange somewhere is selling coins that they don't have, and they're buying back when they need to buy back to meet demands for withdrawals. I don't know. But definitely, I think everyone has this sense in their head that something is off. And there's no way to know for certain until, something blows up and it's all over the news. But definitely, I would say it puts the suddenly, very close to now. And it could trigger at any time. And that's kind of like the Omega thesis. And I think that the current situation of Bitcoin price is definitely, on the verge of Omega. And I think there's an opportunity for a third major Bitcoin client fork, or branch, whatever you want to call it. Fork kind of triggers people, but just like another benign clone of Bitcoin Core that is kind of the middle road, removing some of the more contentious changes that Core did and maintaining security fixes. Because you can say you don't have to upgrade. And that's often a counterpoint from the Core side. Like, oh, you don't like what we're doing. Don't upgrade then, or run something else. But then, when people run something else, they go, you're stupid for running that other thing, right? But, you also cannot not upgrade indefinitely. You have to upgrade at some point, maybe 1 year, 2 years. If you're a mining pool or an exchange, I think, probably in the 1 year mark, because there will be optimizations and bug fixes. So yeah, I think, I'm in the middle ground, and there is a middle path through some of this mess. But there's a problem with that. There's a problem with that, Danny. So I don't know if you noticed, but the core faction is getting more agitated, and it has to do because of the increase in NOTs node runners and their impact on the network itself. So what you're seeing is the mempool fragmenting because people are filtering. And that has downstream implications on the network, like compact blocks are affected. And you have the more increased likelihood that mining pools will have private pools. And that has additional impacts too. Like RBF can be impacted as well because, you don't see all the transactions, or you're not able to estimate fees as accurately. And that can lead to some things like lightning pinning attacks too. So my feeling is like they realize that there's a problem now, but their toolkit generally involves yelling at people and saying, just listen to Core. And that doesn't really work either. So there is a crisis, I believe, in the Core camp.
I see a lot of the comments and a lot of people on Twitter who genuinely believe that Core 30 is going to destroy Bitcoin. That's something I wholeheartedly disagree with. I want to know your kind of take on that. I think the whole conversation has got too inflammatory.
Yeah, I would disagree with the Knots camp and in that it's going to end things, but I also think it is not a good idea to remove all of these defaults because, if pools upgrade blindly, then they're going to have an impact on the network. So you'll have, larger op returns, and you'll encourage other projects to build on this new Bitcoin, because there is no deterrent. There is no, disposition from the developers of the main Bitcoin client to resist these external protocols and resist spam. So I think there needs to be a detriment. But again, if everyone did upgrade to 30, I don't think it's the end of the world. But I also see the increasing adoption of knots is causing problems for how the core developers view the network should be.